War Room Session, ICS number 25. Hello. 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 Okay, perfect. Yeah, it's great. Great. Okay. So I wait for you so we can communicate. Not a problem. Yes. Okay, so just for the purpose of the recording, War Room ICS Intense Coaching Session number 25. Trainee Alan Vergara. Today we're going to discuss TEVA, TEVA, as a value play going to 2020 and looking for the next 2 to 4 years. I'm expecting to make 200% of my money. I'm applying Wolfe Wave as a tool to determine the potential high into this stock, understanding that Warren Buffett is one of the biggest investors allocating capital into this company. We will review Guru Focus, and as well after we do this, I want to go back to the basics. As usual, we just record, always have our SP 500 analysis that has been top notch and probably one of the best analysis in Wall Street ever. And of course, it has been kept a secret for everyone at the War Room. We do expect to have some potential, at least 100% on the calls that we still have on SPY. And
Hola.
hola. So you heard everything, right?
I was having a hard time.
That's right. You're here now. Did you hear everything I was saying?
Just now.
Okay.
I missed everything that if you were saying something.
Yeah, but it will be in the recording. Okay. So now that I
Okay.
have you, welcome. We're on ICS number 25, 25th. And we're going to start. We'll take a look at right now on the screen. You should be looking at TEVA, TEVA. Okay.
Mm-hmm.
And what we'll do today is that we are going to analyze this particular stock and see what we have as far as insiders. We're going to apply Wolfe Wave besides what we have in the short term as the trend Fibonacci. But the Wolfe Wave, what it's giving us, do you see TEVA on your screen?
Yes.
Perfect. What it's giving us is a preliminary idea where TEVA is going into the next 2 years. TEVA is going to hit $27. This is not if, it's just about when. It's going to be $27, and by the current price, this will give us almost a 200% on our money. So this is how much I'm thinking we're going to make it. So it's going into the War Room tactical portfolio, and this is one we're going to recommend to everyone in the War Room. Of course, TEVA does have a lot of challenges, but there is tremendous potential. And based on Wolfe Wave, this is where we're heading. Absolutely, this is where we're heading. There's also an opportunity to go back to 54, but at this point, this could potentially be seen as something that may not happen. But I'm going to share with you something that I have way before. Do you see this chart? This is Tesla. Do you see it?
Mm-hmm. Yes.
Okay, so the Wolfe Wave started somewhere around this area when it was trading around $250 to $218, and I already have these levels. All the levels have been reached. So at least based on the Wolfe Wave, you have the potential to go long Tesla all the way to 379. This is information getting from all the different waves that you can see to the left. Those targets were reached eventually the later 2019. So you have it right there. You can see the information. So it's the same way. Now, the only difference that the way we're using this on the TEVA stock, what we're doing is that we're using this point here, this corner right here. This is called P5. And just sharing with you the nomenclature and ideas, how the strategy, the the analysis works, but this is just a guidance, sort of mapping as well as I explained before, and this is where it goes. The price has to go all the way here to test this 27 area. And the confirmation that this will happen is as soon as we have prices trading above 11.60. $11, $12, that's a full confirmation that we have a new rotation, and it will take TEVA all the way to $27. The narrative right now is very important to understand. It's growth, it's too expensive. It's too much. The market is shifting from growth to value. The question is, which value stocks are going to be benefit? We're talking about the Intel, the AT&T, the JP Morgan, the Wells Fargo. Those, just to mention a few, those are value companies, value stocks. Growth stocks, common names, all the techs. We're talking about the Netflix, especially Netflix. We're talking companies like Apple, we're talking about Google, Facebook. Those are growth stocks. What happened with growth stocks is that they are based on growth, and there's just XYZ amount of growth. For example, the best case is always Netflix. How much growth can Netflix pull out of the market worldwide or even in the US, where is there a common saturation of streaming services? Not so much, right? So this is important to understand. So that money that was being in growth, that was really good. Keep in mind, where was Netflix? And where's Netflix now? Almost 330. Netflix was probably what, $5, right? So it was really affordable. Now it's just a very expensive growth stock, and they have been growing so much. Remember, at the beginning, you grow as a company, but then eventually you stop growing double digits. After double digits, you just grow to the normal, and then you start growing at the rate of the market. But there are so many competitors. Now, TEV, on the other hand, is just a value stock. So clients will, investors will shift into this company, and this will propel. Of course, it doesn't change what we have so far as the trend Fibonacci. We have this blip here, how it's pushing higher, same as the SP 500 is pushing higher. And the short-term target, short-term, medium-term, 1376 at least. And because we're looking at March, there's a lot of good news. Of course, there's a lot of bad things that may not happen. We have this conflict, on the table between the tensions now between Iran and the U.S. But of course, can also go in a good way for this company. So we keep in line. As you can see, something that you mentioned, and I was really glad that you said it. I mean, you said on the January you have little money, and then you have more money on the March one. So you have no concern so far that you are positioned to a good return on your money because you have enough time. That's the most important.
Yeah.
So far, any questions?
No.
Perfect. Now I'm going to jump to the S&P 500. I don't want to for us to lose our habits. Now, also continuation with the Wolfe Wave. I'm going to share this, something that I want you to watch a couple of times when I send you the video. We'll send you the video right away today. The reason is because I work this with our team in Spain. And the reason why I decided to continue this, besides everything else that I do with Trend Fibonacci and price rotation, is because it gives me a specific idea of risk and how to trade within that risk. I will explain. First, the Wolfe Wave, this is the 0.4 and this is the 0.5.
Are you gonna share it to me?
Yeah, I'm sharing with you. You should be looking at it. And there you go. Do you see it now?
Yeah.
Perfect. Again, this is just as a reference. And the reason why I'm sharing this with you is to have a specific idea of the risk that I'm understanding based on this analysis. Now, the 0.4 is here. You can see the 4, and this is 0.5. The distance of the head, which is the final, this is the head of the Wolfe Wave, gives you a percentage or points, from this case, 830 points. Now, what I do is that I take the 0.5, P5, and then project those points all the way up. So 3,700. It's a thing. It's absolutely a given. The S&P will trade at 3,700 points. Right now, you cannot probably see it. Maybe you don't believe me, but it will happen. Simple as it is. Also, based on the information that I sent you from Shovaco, remember the video about demographics and all the analysis on the S&P 500 in the next 4 years?
Yeah, that's scary.
It will happen. It will happen. And it will happen now because I'm telling you. Please don't believe me. Never believe me. Always questions my ideas. But Shovaco does something that I truly believe in. Demographics analysis. Based on population and based on the population that is right now in place, millennials, because remember, baby boomers, they already passed the sweet spot. Baby boomers already are 70 years old. They already passed the real estate boom. They already passed investing in stocks. They need more security. They're no longer going to push the stock market. So now millennials and new demographics, they have to risk all because they have little as well. And they don't buy houses. Funny thing. So their focus is right now. And their right now means the stock market. So there are the new demographics that are going to push higher. Also, to that, I want to remember you about I'm going to keep this so you have it in front of you. The inverted yield. Did you remember last year everyone was talking about the inverted yield, the inverted curve? It was the topic on Main Street. And everyone tends to use this as a recession indicator. The problem is that people, the media, they don't understand what's the inverted yield. The inverted yield is a warning. That's what it is. It's a warning to let you know that the show, it's about to come to an end. But that doesn't mean tomorrow morning when it's inverted. It means that once it's inverted, the clock, it's ticking. That's what it is. People don't talk about this. After, statistically speaking, after the yield curve is inverted, the S&P may go as high as 25% from the level. So at that time, probably the S&P was at some point, let's say 2,900. Okay? If you take that, I'm going to do it right now. You take 2,900, for example, times 25. That gives you 725 points plus 2. So that gives you a result for the S&P 500 around 3,625. Not different from the extension.
3,700.
Exactly. Bottom line, Alan, the S&P is going up. That's the bottom line. Go ahead,
but
please.
the recession has to happen first.
No, it doesn't need to happen.
No
recession. Okay. Absolutely.
Okay.
The fact, this is what I want you to think, and I'm going to give a couple more seconds for all this to have to be on the screen. The fear of recession of the many that keep throwing money at short positions in shares, not in the options market, in shares.
Okay.
Shorting stocks that they shouldn't will fuel even higher prices, because that's what they call, what they do is the SQ actually. Well, short seller squeeze. They squeeze the short seller, and I think you might be familiar with the idea, right? They squeeze the shorts. So that's what they did in Tesla. All these hedge fund managers, they thought they were brilliant, and they started shorting. But we knew in the insider report and the war room, we knew that Elon Musk was, as an insider, he was buying constantly. He was buying shares. He was buying 25 millions. He was buying 10 millions because he knew something. Of course, it looks like the big guy is betting on his company to create faith. Yeah, sure, why not? But then remember, he's buying with his money. And he always going to have more information than any hedge fund manager. Always. He knows.
Yeah.
He knew he will open that factory in China. He knew.
Yeah.
And guess what? By buying his company back at $42, $220, now the company is $440. He made 100% of his money. He made $25 million free of cash. Just like that. Okay. Now let me clean the screen a little bit and have this. So the bottom line is that not only using Wolfe Wave, but also using statistical information based on the yield curve, we have the Wolfe Wave, Wave, and we have the distance between P4 and P5. On the S&P 500, very important, it gives us around 3,700. The yield curve, inverted. It tells us that it can go up almost 25%. That gives us a number around 3,600. Two views, one based on a fundamental aspect, fundamental view, which is the yield curve. It happens. It happened. One based on a already placed idea. You have this. So if you have this, you will have this. And prices all the time. Remember when we have that deep discussion about what to expect in 2020 from the S&P 500? Look at P5. Where's P5? 2,875. That's the worst that will happen to the S&P 500 in 2020. If it happens. I want it to happen because when prices get here, and look at that, look at like the irony. Look at the trend line and the break. That break will have levels. One level will be here around 3,080. And then the second level will be here. But when we get here, Alan, those call options, wow. It will be a festival of money. A festival of money. Absolutely a festival of money.
Yeah.
To cover this section, I want to go over
what's going to happen with our so how is that going to affect our SPY?
Okay, the SPY right now, this is what we have. Let me go to the SPY. Let me talk about the SPY. Okay, so here's what we have on SPY. We are playing this rotation. We talked about it on the previous ICS. So the SPY right now, what we want the SPY to break 30 to 62. We want to have an all-time high. And that after that, moving here. And that's what we're expecting. And we know we have some money on the SPY. I don't have to ask you. I'm pretty sure we have some money there. I have some money there too, so that's very important. So this is what we want. We want it to move. Actually, I've been playing and move above 32.50. We want to break this high, 32.62, and go all the way to this level. This is where we're going to make the money. That's where we're going to make the money. And here's always something that, again, I have to point because this is just an idea that we have to keep in mind. We're talking that our expiration date is on February 21st. We have a little bit of time, and we're playing with that time. You go in at 35, correct?
We're still in the same chart, right?
Yeah. I'm looking at it, but we're still on the same chart. No worries. So we have the February 21st expiration, correct?
Correct.
And that would give us plenty of time. Now, one thing one thing that I'm going to finish with the S&P 500. We're playing this rotation here. This is what we're looking to. We're looking to break the all-time high at 32.62 and do a continuation all the way to 33.25 to give us an opportunity to get out of that trade. Now, I'm going to talk about gold. We look at the chart in gold. Do you see it?
Yes.
Okay, perfect. So, as we said, we also have time. This is why I don't, especially when it's not earnings season, I don't want to be in trades that are the same month, especially in options, because it's really challenging, a lot of anxiety. It's just a stress. Now, what we're looking here is this, pretty simple. We're looking at a multi-year resistance. Okay, it's a multi-year resistance, and unless there's finally a debate between Iran and the US, nothing will happen. Absolutely nothing will happen. This is a massive multi-year resistance at 61.8. That's 1586. You may take here, and then it has to retest. Now, this is very important to understand, because at the end of the day, the trend Fibonacci, what it's telling us on the reverse, is that this level, it's a very strong resistance. It comes all the way. Look at here. You have this area in this section. Let me bring the pencil. You have this area, and you have this area. This is a very strong resistance that we're playing. And this is where we have the opportunity to at least go to test the 1483. That should translate, I'm expecting at least at $1 drop in GDX. The other thing I mentioned to you is that at this level right now, the price of gold, let's take a look at the weekly. Look at that. Do you see that? This is the monthly that we used before. Look at what it did. Pretty much we're talking that it moved is a highly parabolic move. And every time, look what it did here, and so the expectation here is one more time, either to this uptrend line, which could be somewhere around 1500, or this level. And that will give us an opportunity for us to make the money on the put. That's what I'm expecting. That's why I'm in the position. Now, if I remove all this, let me clean it, and
so it has to reach the 61.8% level first.
Yeah, I already did. Yeah, I already did. Yeah.
So it's like it's gonna be soon that we're gonna start making money then on GDX.
Correct, and that gives us plenty time. So, and then that's to say we have a lot of weeks. Let me pull up the GDX trade. I got it here. GDX. We have the 27, correct? Okay. On the GDX.
Yeah,
perfect. Look at the volume. We have the open interest 30,461, volume 735. The low 20 cents. We're still 25, relatively not too far from where we bought. And of course,
1 cent spread.
Correct, 1 cent spread. And there's action between the bid and the ask. Of course, look at what GDX is doing. It's slowly moving. Not a lot, actually. Not a lot. It's not doing much. So it means that even the fact that gold is going up, it's not really pushing GDX all the way high. So if I take and I'm going to go to trading view. GDX. There you go. here, we're going to take this. The monthly, we still have a range that can be covered. On the weekly, the same. The bottom line is that the lowest we can see is 26. Still green, but we have less volume than here. Sellers. Do you see the sellers on the daily chart? You see the volume here on the volume, the Hawkeye Trader volume pack. Still momentum. That means that heat map with the other indicators is not aligned. And then slowly you have the red here. You have the red. Previously, very
the red point.
Correct. You have here the red and the red. But something that to call your attention. See how Roadkill, that for me, I know you hang out with them, with Hawkeye Trader guys. For me, Roadkill is the best indicator that they have. Everything else is okay. The volume pack too, but this is for me the crown jewel of Hawkeye Traders, Roadkill. You see
the Roadkill.
Yeah, absolutely. Roadkill is the tool. They have another tool.
I still have to explore Hawkeye.
Hawkeye Trader is an absolute, because I talk to Randy on a monthly basis. Hawkeye Trader is a great technical tool. The thing with them is that they trade, a lot of them, they're focused on oil. So if you were wanting to trade oil futures, oil as it is, they're doing very well. Not because it's the only thing that you can do, but as a group, they found a lot of success trading oil. And that's good. Randy trades gold. And personally, I talked to him, and he told me that he has multiple $10,000 days. And I believe him, because he has
oil?
And everything. He made, the other day he made like $10,000 in gold. Very good. I can show you. For example, look at this. Yeah, but it's not about. I understand what you can feel like. Oh, okay, it's happening to them. It will happen to you.
Yeah.
It's just a matter of time. Yeah, it's just a matter of time, because you have these tools. Look at this, for example. Look at this. Look at this big green, which is the bullish buy at the entry.
Yeah.
In GDX, $27. December 19. Yeah, last year. December 13. Look at this.
Yeah. Yes.
You have there. Poof. What is that? 10%. I told you 10% variation. That's the 29. I can prove to you. You can make money. Look at this. I'm going to old NASDAQ real quick. GDX. I'm going to look at the January. Be this one, for example. And for example, let me take March. Okay, let's try with this one. So you see, this is the 29th strike on March 20. Okay.
Yeah.
But GDX, sometime on December 19, December 16, look at this sideways price since December 11. Okay. The support was $27.10, and then it burst, it exploded to the upside and goes all the way to 29. So when you're here at 27, we have talked about this. What is the percentage variation that you're looking? 10%.
10%.
So the 10% of 27 is $2. Total $29. You see, now this particular There we go. Okay, there you go. The March 20, 2020, 29 call. The low is 58. Look at this chart here, the 1 month.
Yes.
This is December 16, 23. You see?
Yeah.
Somewhere below $1, all the way up, 100%. That's it.
That's it.
But yeah, pretty simple. And I can use Hockey Traders to identify the opportunity. So, for example, the retail trader, someone that never heard about the war room, price rotation, trend Fibonacci, 10% variation, he will buy and he will leverage himself to do this. But as you know how to play the call and what to look for, when this was around below $1, you're buying it. Because you're leveraging yourself with a vehicle, not with your broker, not leveraging your account. You take $5,000, you go in here, you make 100% in less than a month. Another example. Look at this, same story, beautiful. The January 27, this is a little bit tricky because this is about being in the money. The January, remember what I said? We said in the money, be in the money. Okay, this one is tricky. Between December 11 all the way to December 23, the support is 27.24. What we say on this one is that by January 10, GDX will be 27, will be in the money. Look what happened. Look at what happened below $1. Below $1. Look at the volume, plus 2,691. The spread is what? 2 cents.
2 cents.
The contract low somewhere here, 55 cents. By January 10, that means in 3 days, GDX will still be above $27. Look at what's happened. 1, 2, 3, 4, 400% of your money. That's it. $5,000, $20,000. You don't buy just the shares. It's just the practice all the time. The practice. Okay.
Yeah. Yes.
Okay. Now, as you can see, now we have this range. We have to break every time that we get here. Look at what happened. 29.86. We go back to 29.13. And we can easily go to 28. We at least need this dollar to just drop, and that will give us an opportunity. Let me look at the 4-hour chart. What we have, you see, massive, very strong support at this level. We have the 50 exponential moving average at 28.24. That would be $1. That would be $1. And now look at this one, because on the 4-hour chart, this is telling us something very important. Look at how big. How big that bar is, the sell bar.
Yeah.
And look, now we have 2 dots bearish on roadkill. There you go. There you go.
Now the heat map is gonna.
The heat map is still a little bit lagging, but we just need the synchronization.
But it will eventually follow.
Correct. Yeah, absolutely.
Yes.
Yeah, so that's what we're looking at. And now we wait.
Yes, we got time.
We got time. That's the most important. Let me just take this.
February 21st is enough time.
Correct. It's absolutely enough time. Now, let me do something. Let me just go back to the charts and let me look for gold as an option to see if there's any Wolfe Wave that we want to be aware. You see, this one has been already completed. Okay. Wonderful. Look at this one. Okay, so this one is in the 5-minute chart. Okay, But what this one is telling me is this: there's $7 more. So if in the next days you see gold trading at 1580, don't be surprised. It's perfectly common. And then from this level, it will drop to 1563. Now, what I want to know also is what happens when it trades below that. When it trades below that, it will trade below the 50 exponential moving average on 5 minutes. Let me just go back because this is important for you to see. 1563. That means that also it will trade below the 50 exponential moving average on 15 minutes. Also, it will trade below the exponential moving average on 30 minutes. Now, on 1 hour, it will be just right there. Just right there. But if I throw this, it can go up here, it can go up here. And once that happens, this is where it gets interesting. There you go. At this level is that we will see how GDX reacts when gold makes this push lower. That's what we're waiting for. Okay? That's the most important. That's the idea. It can still make a little bit of climb, okay? And then technical analysis 101, double top, and then there you go. Why? Because you have one top, this top, and if you want to push something lower, you're going to buy first. You're going to push it high. So you think people that, oh, it's going to be a continuation, but it won't be a continuation. And then you have the sells and prices go down. So we have to be ready. And that's why I bought time, because I want to have enough time for this to take place. Okay. Get it there. And perfect. Questions so far?
None.
No. Perfect.
No, sir. None at this time.
Something I want to talk to you about. You mentioned, because if I don't reply, I wanted to let you know, if I don't reply right away, please just give me some time to reply. I see all your messages right away, unless I'm sleeping, and I don't sleep that much. I see all your messages. Okay, so if you send me something and I don't reply, I talk to it. Just remind it to me. Okay. For example, you talk to me about Wells Fargo. Okay. I think I have Wells Fargo. Yeah. So what prompted you to look at Wells Fargo?
I thought I was reading something, or
well, no, not reading something. What were you reading that made you thought about Wells Fargo? Tell me.
Oh, like it could like go either direction.
No. Okay, so this morning you sent me this about Wells Fargo. So you saw something, you heard something. What prompted you to look at Wells Fargo? Or you just dream about Wells Fargo and you... Sorry, I think you're breaking.
Hello?
Yeah, I'm here. You there?
Oh, yeah. Can you hear me?
Yeah, I can hear you. Go ahead.
Oh, okay. So I thought it was, I looked at the chart and it looked to me like it was setting up. So I'm not sure if it's gonna go. It's a sell setup or a buy setup.
Okay. Do you see my screen?
Yes.
Okay. Do you see Wells Fargo now?
Yes.
Okay, perfect. So this is the Wolfe Wave on 1 hour. Let me see what we have on daily, something else. Okay, so I can tell you Wells Fargo is going down. Okay? Look at it. It's trading below the 50 exponential moving average. That means we favor sells. So the first target for Wells Fargo. So you're correct, Alan. First target, 51.12. It's trading at 52. Next
Oh
one,
wow.
49.40. And remember, this is the 1 hour chart. So this will happen in the next couple of weeks, in less than 8 weeks. And see here, 47.55. So this is the last one. So 10% of this will be, there you go, 47.55.
So we can go find the puts for within that range.
Correct. And let me go back, see what you found me. You found me the, now you see, 47.50. Very good. Very good. And
which one? My chart analysis?
yes, you send me on the old Nasdaq, you send me the 46, the 47.50 March 20. Good timing, good time. And this has an open interest of 8,800, and you have a 1 cent spread, and there's rotation.
Oh
the
wow,
rotation.
I'm like right on the money.
Yeah, you're right on the money. And also, you see now, as we search together, the Wolfe Wave is indicating that it's absolutely an opportunity that we will see Wells
Yes.
Fargo trading at 47.55 in the next week, because the Wolfe Wave is on the 1 hour chart. One thing I want to take a look at is 32. So we're about to close this ICS. I'm going to give you a call, okay, and we continue talking about this, okay? For the purposes of the recording, as I said, this is ICS number 25.
Yes.
Thank you, Alan.
Yes. Thank you, Jose.